Welcome back to this lesson. In this lesson, we'll be discussing on the economic calendar. So, the economic calendar is crucial for a trader because it helps us to plan ahead in the days to come in the week of the days that we are supposed to engage in the market, and also we are able to understand the days where we can avoid trading because of the volatility injection by news. So the economic calendar helps us to anticipate what the market may do, because essentially we said that the smart money, their aim is to manipulate the uninformed money so that they may to manipulate the uninformed money. So essentially we look for us as a trader, we look for convergence of manipulation. So we don't want to be caught up in that manipulation. So we are going to look for the convergence of manipulation with the economic calendar, where it will suggest that we will rally or decline. So when the news is injected into the market, there is a high probability that when the manipulations has occurred, the market has a likelihood to either rally if you are buying or decline if you are selling. So this is the platform that I use. I use the forexfactory.com. So you have to create an account with them. You log in. But I'll show you how to set it up, because there are some news. Using this filter, there's a filter here of filtering the currency pairs that you focus on, and also the impact. So the red is the high impact news. So we want that to be on because we are interested in the high impact news. Also, we are also interested in the medium impact. The third one is the low impact. So not so much for the low impact. We are not so much interested in the low impact and the non-economic. So we tick these two boxes, and then in the currencies you come to tick to highlight the currencies in which you want to trade. So I'll select the euro, the pound, and the dollar. So then you apply filter. So when you apply the filter, in every week of the month, you'll have the news highlighted for you, and this will be able to, with this news, you'll be able to plan ahead of time and know when volatility injection will be made and done. So as you can see, on Monday we don't have any volatility news, but it doesn't mean that when we don't have volatility news that the market won't move. The market is always on the move. It's always moving somewhere. Either it's consolidating, either it's expanding, reversing, or retracing. So always the market will move, but it's up to you as a trader to be able to anticipate when the economic calendar is beneficial to your model and to the day in which you are trading. So there's also some very high impact news which I can advise you to stay away from in the beginning of your learning process. As you grow, you may come to practice, but in the demo, but I can advise for you to put them aside first, so that you may, in your growth process, so that you may be able to find a rhythm, a consistency in your trades. in your trade setup. So for example, there's the non-farm employment change. This is the NFP, which usually occurs on the first Friday of the month. I have to change the time, so you have to change your time zone to the US, which is GMT -4. Let us see, -4. Yes. So as we have changed our time, the NFP occurs in the first Friday of the month, it occurs the first Friday of every month. And then there's also there are also news like there are also news like CPI. Sometimes CPI is generally, I can say it is not so bad, but as I've said, you have to come to be able to master and to practice. So, but there are sometimes the CPI is very volatile and it may do backflips on you. So if you don't know what you are doing, you are going to hurt yourself. So, but it is better to learn first. Yes, the CPI. To learn first how to maneuver. Then there's the FOMC, which occurs, mostly it's on Wednesday. I'm looking on that day which it happened on the week. It is usually on a Wednesday at 2 p.m. and 2:30. There are usually two news, 2 p.m. and 2:30. I'm looking for the news, but I can't seem to find it. It's usually on Wednesday. Let us look at. So as I've said, the NFP occurs on the first Friday of the month. This was September. So the next week we had CPI, PPI. These are not usually so bad. They are not so much volatile. And then on this week, the third week, we had, on this Wednesday, we had 2 p.m. the FOMC statement. And at 2:30, we have FOMC press conference. So this is usually a press conference. So the impact mostly is not immediate as the FOMC statement, because for this press conference, it's people speaking and addressing and releasing news, maybe to a conference, to a press conference. Yeah. So the impact usually happens around maybe some minutes away from the 2:30. So you may not see the impact immediately, but sometimes it may be immediately, or other times it may be after like 5 minutes or like that. Yeah. So there's also a difference between, as an assignment for the news or learning the economic calendar, for you to go and see what happens between the press conference, the news that have press conferences and the statements. You'll be able to see the difference. Another thing, I know that for most retail traders, or the information that you'll have from outside, from people who have traded before, or when you Google, is that in this, the actual versus the forecast and the previous, this data which is given here, some people use it to trade. But generally, so far from what I've experienced, this is not so impactful, and I don't actually use this data. But some people who are retail traders, they think it is impactful. But we have come to learn with an institutional mindset. We have come to learn with a smart money mindset, mentality. So even if you want to check it out, do some practice, you differentiate on what happens when you don't even look at this data that is provided. You can see, like here at FOMC, they say that the actual, okay, let me go to something that has not yet happened. So like this one is the Friday FOMC non-farm payroll NFP. So we can see that the actual data, it says 254,000, forecast 147k, and the previous was 159. So some people use this to estimate if we have had a rise or a decline in this data, but this is not so much needed. We don't need this data. What we need is to know that we have the news, and is it a high impactful news, and then go into the market, plan our trade by understanding whether whether there are any manipulations that have occurred in the market, and then now going on from there. So every time you come to trade, every trading day, every trading week, we use the economic calendar to be able to plan our trades, our trade setup, and even to plan our week, how our week may go, and what we expect of the week. That's it for this lesson. Thank you.